Since the day Donald Trump returned to office in 2025, his administration has been known for controversial decisions. From shaking up trade policies to clashing with Fed Chairman Jerome Powell, Trump's actions so far have sparked heated debates. The latest one is the tariff war. But what if these tariffs aren't just about trade? What if they're a chess move in a much bigger game that could save the US hundreds of billions of dollars? If you look at the mainstream media, you will feel like he's doing something wrong. So to know exactly what Trump is doing and what exactly he wants to achieve, please watch this video till the end with full attention. Whether you like him or not, try to watch the video from a neutral point of view regardless of your political bias. So to sum it up in one line, whatever Trump has done since he came to office is with one and only one goal, and that goal is to reduce the interest rates on the US government bond. All of his steps, like tariffs, a weak dollar, and Doge with Elon Musk, are pointing towards this thing only. Now, you might be wondering why Trump is focused on this one thing. The main reason is that the US has $36.2 trillion of debt as of May 2025. Out of this $36 trillion debt, around $9.2 trillion of this debt is going to mature in 2025. That is around almost 25% of the total US debt. Now, as $9 trillion of it is maturing, that means the US government has to pay back $9 trillion to those bondholders to finish off the debt. But the government does not have $9 trillion lying around just to pay off the investors. So then, what the government does is refinance this debt. It means it issues new bonds at the current market interest rate to pay off this debt. Let's see a simple example. Let's say Japan is holding $1 trillion out of this $36 trillion debt, which matures in 2025. These bonds were issued in 2020 at an interest rate of 1%, so the US has been paying Japan $10 billion per year in interest. So when this $1 trillion matures, it means that the US must repay the principal of $1 trillion to Japan. The US government doesn't have $1 trillion in cash sitting around to pay Japan. Instead, it refinances by issuing new treasury bonds. So the treasury issues new bonds of $1 trillion with the current interest rate or yield. The current interest rate on bonds is 4%. That means the US government will pay $40 billion in interest each year for its $1 trillion debt to Japan. Now, apply this to the whole $9 trillion debt, which is about to mature. If the US government refinances this debt at the current rate of 4%, then it will have to pay $360 billion in interest payments to bondholders. Already, the US is paying more than $1 trillion in interest payments each year. This $1 trillion is more than the total defense budget of the US. Now, what Trump wants to do is to reduce this interest rate from 4% to probably 2%. That way, he can save billions of dollars yearly in interest payments. If Trump manages to refinance this $9 trillion with a 2% yield, then he will save $180 billion in interest payments per year. That is almost $1.8 trillion over the period of 10 years. So lowering treasury yields is Trump's main objective, and he's taken steps like tariffs and a weaker dollar to achieve it. Now, you might be wondering, why can't he just reduce interest rates directly? Well, as president, Trump doesn't have the authority to do that. Interest rates on US bonds are determined by market demand, not the White House. Even if he could, forcing rates down artificially would have a catastrophic effect. Investors would lose trust in the US government, fearing financial manipulation, and in the long run, they'd demand even higher interest rates to compensate for the risk, making borrowing even costlier. That's why Trump is using indirect methods to influence the market and bring yields down naturally. How do tariffs fit in this plan? At first glance, Trump's tariffs seem like a blunt trade weapon, slapping a 25% tariff on imports to protect American jobs. The logic is, tariffs raise the cost of goods, disrupt supply chains, and reduce consumer demand. Imagine a China-made product that costs $100. A 25% tariff on it will push the price to $125, so very few Americans will buy it. This drop in demand helps in lowering inflation. If there is low inflation, it means investors expect lower yields on treasury bonds. If the 10-year yield falls from 4.2% to 2%, Trump can refinance that $9.2 trillion at a much lower cost. But tariffs alone could tank the economy into a deep recession, which Trump can't afford politically. That's where his love for a weaker dollar comes in. A weaker dollar makes U.S. exports cheaper. Say a $30,000 American car becomes $27,000 for European buyers after a 10% dollar drop. This export boost softens the tariff-induced slowdown, ensuring the recession stays mild while still lowering yields. Meanwhile, a weaker dollar also makes treasuries more attractive to foreign investors as they get more dollars for their currency. This drives up bond prices and pushes yields of these bonds further down. As these bonds are safe and in more demand, investors will be happy to get lower interest rates for the safety of their investments. This is a win-win for Trump's refinancing plan. Trump's strategy depends on low yields, but he's not the only player on the board. Enter Jerome Powell, the Fed chairman, who's been a thorn in Trump's side since 2018. Trump has publicly pressured Powell to cut interest rates, even called him a threat to the economy. If Powell cuts interest rates, the 10-year yield might drop from 4.2% to 3% or lower, saving billions. But Powell, who is independent, might resist if he sees inflation risks, because a weaker dollar raises import costs and could spark short-term inflation. Picture this. Trump, in the Oval Office, is pushing for a weaker dollar and lower rates to refinance $9.2 trillion, while Powell at the Fed holds firm, warning that premature rate cuts could reignite inflation like we saw in 2022 when it hit 9%. This clash isn't just about policy, it's a high-stakes power struggle that could determine whether Trump's plan succeeds or backfires spectacularly. What if tariffs and a weaker dollar aren't enough? Trump also has other cards up his sleeve to manage this $9.2 trillion burden, such as he could cut government spending to reduce the deficit. This is exactly what he's doing with the help of Elon Musk and Doge. They are finding the government wasting money and reducing spending. Imagine the government saving $500 billion in discretionary spending. It means less new debt and less pressure to refinance. Imagine it's late 2025. Trump tariffs have slowed the economy just enough. Yields have dropped to 2%. He refinances the $9 trillion, locking in an annual interest cost of $180 billion instead of $360 billion at 4%, saving $180 billion annually. But Trump won't be done here. With a slow economy and the debt refinanced at a lower interest rate, now Trump will flip the script. He will probably launch Stimulus Round 2 just like it was done during COVID, sending $2,000 checks to 150 million Americans. A $300 billion injection into the economy. As people will have direct cash in hand to spend, they will start spending, bringing the slow economy back on track. There are a lot of things that can go wrong in this plan of Donald Trump, but overall, every single thing he has done is pointing towards this only. What can go wrong, and how successful will Trump be? And how is China creating obstacles in this plan of Trump? All of that we will discuss in the next videos, so make sure to give it a like and subscribe to the channel.